This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is the benevolent despot himself. It's Rob Reinhold.
Well, thank you. I'm going to have to look all those words up. I know what a despot is. I know what benevolent is. Okay, I can handle that one. Thanks for having me here, Patrick. Always fun to talk with your subscribers and really anyone who wants to get better at trading, because this is where the game is won and lost.
And what I thought we'd do this week is, not what I thought I would do. This is a Rob put together episode, but I thought now would be a good time to talk about it since it's early in the year and we spent so much time really drilling down deep and getting into the nitty gritty on things. Let's take a step back. Let's, kind of take a breath and do something that really is for everybody, because if you're new or newer, I think this will help a lot. But even if you're experienced, it's nice to kind of take a step back every once in a while and say, hey, why do I do this? Why do I love doing this? And just what are some of the real basic things that I have to watch out for in trading the Forex market? So we're just going to keep it to Forex for this episode. We may do other avenues later. But Rob, go ahead and get us started off here. And as I always do, I will jump in where I feel like it's appropriate.
Thanks, Patrick. I'm going to start out with the saying I've been saying for years. Trading is trading. Now, you might be thinking to yourself, wait a second. That literally doesn't make any sense. So let me explain what I mean by trading is trading. I don't care if you're trading stocks. I don't care if you're trading Forex. I don't care if you're trading bonds. I don't care if you're trading anything. It's really the same game, and I liken it to an analogy of a car. When you get into a car, we all know it's the basic things. You got your gas, you got your brake. Some cars have a clutch. You've got your gears. And really, driving is driving. No matter what car you get in, you can probably get to where you're going based on the basics that you know. So driving is driving. Whether you're driving a go-kart, whether you're driving a truck, whether you're driving a minivan or whatever. It's the same mechanics. So when we talk about trading is trading, really everything is the same dynamic, because in the end, everything is simply a symbol that is a current market price, and that current market price will go up and down based on supply and demand. So really trading is ubiquitous. It really carries across all the asset classes, Forex, stocks, bonds, futures, gold, whatever it is. With that being said, when we go out and we take a look at cars are different. So yes, we might know how to drive them all, but some cars are slow. Some cars are very, very fast. Some cars are used to go very slow so they can pull very large things. So we have all this variability in this world of driving, and we literally have the same thing in the world of trading, is that there are different vehicles that are going to go different speeds. And that's what it really comes down to when we get into trading. Whatever it is you're trading, you've really picked a vehicle, and that vehicle is going to have certain characteristics that come with it. And those are the characteristics that we want to talk about in this episode, and we're going to talk about the good and the bad. So if you have chosen Forex and you say, hey, Forex is what I'm going to go with, I'm going to trade it. These are the problems and some of the advantages that you're going to get along with it.
Yeah, and the way you have it written out here, I like it, because we'll go ahead and start with the advantages. And most of these really don't have a lot to do with trading psychology, but it's almost an advertisement as to say, hey, look, if you're not trading this now, you need to be. Or if you are currently trading it, you've chosen the right path, because there are so many advantages, and I've talked about this early on my own channel, to trading the Forex market, that you're just not going to get anywhere else. So, Rob, go ahead and start off the list here. I'll jump in, and then I have some of my own that I added towards the end.
I personally started trading Forex in 2007. I started trading in 1997, so this was 10 years after. And when I got into it, I remember making my first couple trades and not understanding position sizes, not really understanding much. There's so much better information out there about Forex trading. But I fell in love with it right away. And it was because of these advantages. They did so many great things for me and my personality that it just absolutely fit like a glove. Now, I'm going to jump into the advantages here, but I really want to talk about how where you are right now as a trader, and especially where you were in the first year of trading, there's lots of different ways to trade. You can scalp, you can day trade, you can swing trade, you can do longer term stuff, you can do any of these styles. Eventually, you're going to find the one that's right for you. I found the one that was right for me. That doesn't mean that you can come in and do the same thing, because just what we're talking about here, there are some trading products that my personality, my psychology, it fits like a glove. And there are some that really are very difficult. And if I went to go try to trade those, I would likely fail because of the psychological problems that come up in those products. So I really wish that before every trader got started as a trader, you literally could have a questionnaire and you could have a list of all the advantages and disadvantages of Forex trading, all the advantages and disadvantages of stock trading. So you could actually go through, it's like a menu, and be like, which one do I want? Let's see, that one's a little bit too slow. That one's a little bit too fast. Oh, this one is just right. So again, Forex for a lot of you, it was a really good fit. I fell in love with it. And let me tell you my first thing I loved about it. 24-hour marketplace. Now, I told you that I am an extrovert. I love action. I love to trade. I love all of it. One of the saving graces for me as a beginning trader was that the stock market is only open 7.5 hours a day. I couldn't make any mistakes outside of those times. But when I got to be where I was consistent, all of a sudden Forex to where I can now trade pretty much 24 hours a day, it was really, really good for me, and it fit really, really well. What about you, Patrick?
Yeah, as somebody who's in the restaurant industry and likes to get up at 10 or 11 o'clock in the morning, I mean, it just makes perfect sense. I could have traded probably stocks too, but the fact that even if I had an off day, I could still come back in at night. Now, the markets don't move a whole lot at night during the Asian session, but at least I can get in there and trade if I wanted to. And then, because of my hours, I stay up pretty late as well. So late at night, if I wanted to, I could come home from work and get started. And that's often what I would do. It was a real nice luxury to have. I think really, though, and this kind of leads into some of your other points, though, Rob, is it's just a lot easier than the stock market. There's things, the only thing I knew at the time back in 2009 or 2010 that I could trade, that anybody could trade, was stocks and commodities. And there weren't any really great platforms for that back then. I always thought you had to go to school and you had to try to get on Wall Street or do something like that. I didn't really understand the business too much, and it just seemed really overwhelming. And plus, it seems like you have so much less control over what these stocks do. I didn't understand technical analysis, so it was ignorance on my part. But when I got to learn and study the Forex market, I thought right away, man, this is just so much easier in so many ways.
Exactly. And let me give you a personal story here. My son, he graduated high school a few years ago and was getting into trading. And he's got a trading account. Here's the problem. He does not wake up easy in the morning. It's always taken him a long time. Since the day he was born, I'm telling you, this kid could never fall asleep at night. And then he would sleep until 1 or 2 p.m. if we let him. And he could just never go to sleep. One time when he was about 12, I went up. He was awake. I said, "Oh, you can't sleep?" "Yeah, I can't sleep." Went back up about 2 hours later. He had finally fallen asleep. And I looked through his search history on his little iPod there. And the last search he did was, "How can I fall asleep?" That is the saddest Google search a 12-year-old boy can do. So for him, he literally cannot. He now lives in the Pacific time zone. The stock market opens up at 6:30. For him to wake up at 6:30 and trade, it's not going to happen. It's just not who he is. So I love in Forex and other markets, it doesn't matter for him. It makes it to where he doesn't have to fight this battle of sleep. He can actually do it on his own time. So that's just the wonderful part about the 24-hour marketplace. And I know there's a lot of creative types that also do very, very well in the Forex market because that stock market opens up so early and it just doesn't vibe with them. Patrick, have you ever thought about that at all?
Not so much. I just know that even today, that I don't work hospitality anymore, I still, usually get up right about 9:30, which is weird for a lot of people. But it's never been that way for me. I'm still on Vegas time, even today, and I get a lot of work done at night, and then that's just how it is. And so something like that. Again, if I get up at 9 or 9:30, I could still trade most of the stock market if I wanted to. I'm on Central Time now, so that helps. But just not having those limitations, being able to sit down and do it whenever I wanted to was something that really appealed to me back then. Now, as most people know, I only need to be awake for 15 minutes out of the day to trade the way I trade now. But that's not most people. So for most people, just that flexibility, I think, is really, really key. And each session of the day has its own little idiosyncrasies, and you can learn those too. So it just seems like it's much more tailor-made for most people. And that's just the Western Hemisphere. Most people, if they trade stocks in other countries, they're going to trade the most liquid markets, and that's going to be in the United States. That's going to be really tough if you are in Pakistan or if you're in Singapore or Australia or someplace like that. So Forex is I always say, I compare it to soccer. It's the world's game. Everybody trades it, and it makes sense. The market itself just allows you to do that.
The U.S. trades stocks, the world trades Forex. You're exactly right, 100%. The next one I want to talk about, and this is one of my favorites, because we've spent a couple episodes talking about biases, familiarity bias, confirmation bias, all of these biases that are inherently built into how we look at things. Here's the thing I love about Forex. It automatically gets rid of a lot of biases. The first bias it gets rid of is what I call the long-short bias. Now, in the stock market, you have people that are perma bulls. Everything is always great, and you should always buy stocks, even if the economy is like in the pits. They're like, you should still buy stocks. Well, wait, you told me to buy stocks 6 weeks ago, and now the market's down 20%. And they're like, yeah, but now you should buy more stocks because they're cheaper. So you got the perma bulls, and then you got the perma bears. The perma bears where everything is always terrible. And it's no matter how well the market is done, the disaster is right around the corner. I just read an article today saying that 2024 is going to be down 60%, some guy said. And look, what happens is these guys, they have them on CNBC over and over and over again for years. And then when the market finally collapses, they're like, see, I'm right. It's the old adage, even a broken clock is right 2 times a day. So you get a lot of that bias, that just inherent long-short bias in the stock market. But in Forex, everyone understands that there is no long bias. Like, I don't want to be long the Australian dollar for the rest of my life. That's the silliest thing in the world. But people want to be long Tesla for the rest of their life. They want to be long Bitcoin for the rest of their life. But in Forex, everyone understands there is no long-term, long-short bias. And that gets rid of so many psychological problems. And you can't fall in love. Now, I say this, but I've seen it a couple of times. You can't fall in love with the currency. Like, be like, oh man, I just love the pound, and I think the pound is going to go up forever. Look, I have met people that have thought that, and especially when it's like their own currency, like when I have Canadian traders, and they're like 75% of their trades are Canadian crosses. I'm like, hey, look, that's ridiculous. So look, you still have some issues, but the fact that there's no long-short bias, there's no CEO at the head of any company, it makes it to where when you can trade Forex, you are purely trading the charts. That's what I love the most about Forex.
Yeah, so a couple things on the bias end of it. I had a small bias. Not when it came to trading. I was able to put that bias away. But I was really pro USD, not just because it was my home currency and I wanted to travel, but at the time when I first started, the dollar was pretty weak and the euro was pretty strong, and a lot of other foreign currencies were pretty strong against the dollar. And so those people from those countries would come to Vegas and take advantage of that, the currency arbitrage. And those people would sit in my section in the restaurant I worked in and tip me poorly. And so I was like, man, we really need the dollar to get stronger so these people stop coming into my restaurant and making me work for $5. But apart from that, biased aside, sorry, people from other countries, but do better. I totally agree with you on this is something I've said on my channel so many times. Forex is the closest thing to a blank canvas in terms of trading you're ever going to find. And because of that, if you're good at charts, you can be good at Forex. It's literally that easy. Now, there are of course, landmines we have to dodge in terms of news. That's no fun. But if you can trade your system and you can stick to it, you can do well. There are so many less external factors that can come in and ruin your perfectly good trade. And I love that. I know Forex traders out there sitting there thinking, man, there's this, this, this. Okay, so there's this, this, this. There's 5 times that in the stock market. Which one would you rather have? So yes, it's as blank canvas as it gets. I said this at the very beginning of my trading psychology book. It's open to everybody. Some people might start a little further back, but at the end of the day, we're all rich or poor, educated or uneducated. We are all pretty much starting at the same place when this game starts. And that is really, really awesome.
I've never heard that before, but I love that. Forex is as close of a blank slate as you can get in the world of trading. So true. Like I said, if I take someone in who hasn't traded before and I'm showing them just currencies, there's no bias. There's no bias already built in. They don't know or care about anything in Australia. Like they didn't even know that the Reserve Bank of Australia met 2 weeks ago. So all of a sudden, it's such a blank slate, and they can purely react to the charts. It's beautiful. All right, let's get to the next one. No gaps. Now, I know that gaps will still happen on weekends, but throughout the week, you're not going to get any gaps. Now, for those of you that don't know what a gap is, in the stock market closes at 4 p.m. Eastern Time in the U.S. If there's any news that comes out on that company, when it opens up for trading the next day, the price is going to be wildly different. I mean, there are stocks that were $100 and they open up tomorrow at $50. There was no opportunity for you to get out of them between $100 and $50. So you can't ever really quantify for max risk because of gaps. So because of that, that always leads a lot of people to trade scared. And they're always like, when they get a little bit of a gain and they go into a weekend, they say, oh, the weekend's coming up. Why don't I just sell it now? Because it's just, I don't want to hold it over the weekend. There's too much risk. It causes them to deviate from their system because of these fears of gaps. And trust me, if you trade stocks, this is going to happen to you, and you carry it with you, PTSD. I remember the very first time I had a stock, everything was going great. The next morning I woke up, the stock was down like 15%. And I'm like, what the hell's going on? An analyst over at Bernstein, whoever, a place I'd never heard, had downgraded it. So one dude decided, I don't like this very much anymore. And it ruined my entire trade. I carried PTSD, and every night I had some worry about my positions. And so if I was up on the positions, I would take them. Why? Because I didn't want to wake up to another gap. That is one of the best things about Forex as well. Look, you have very fast moving markets. You have slippages to worry about with Forex, but you don't have any gaps except for weekends.
Yeah, and back then they had after-hours trading too, which was such bullshit because only certain people and certain firms had access to it, and nobody else did. It's like, what the hell's that? In Forex, you don't have that. Not only don't you have things like that, I even said, and I don't know how true this is, but it's a lot less likely that, and he was more relevant back then when I said it, but it's not very likely that even Bill Gates could come in and ruin your euro dollar trade. Like, he might move it a few pips, but it's so liquid that, people who have these special privileges can't just come in and screw things up the way they do in stocks. In Forex, nobody has special privileges unless you're the big banks. We talk about that too. But when it comes to retail trading, when it comes to spot trading, again, everybody is on the same playing field, which is really nice. And I think that liquidity plays a big part.
Well, that liquidity is a great benefit to Forex trading, because that liquidity is going to allow you to do a lot of things that will get rid of psychological problems. So for a very, very liquid market, automation works very, very well in these kind of markets. Why? Because there are going to be tight spreads and there's going to be low amounts of slippage. Now look, when there is a news event, none of that stuff that I just said applies. But in normal trading, Forex is probably the best market for automation. If you're going to be setting up a system that enters and exits at predetermined points, it's probably the best market to do it in. And why do people automate? Well, we talked about it in our episode. Automation is a good way to get rid of some of the psychological traps and disadvantages that comes with trading Forex and really trading anything.
I agree. Yeah, that's always been a big one for me. And if I can transition into the next one, because this is the one I added, and we've touched on this a little bit before, but news affects Forex a lot less than it does stocks overall, in particular because you know when a lot of news events are coming, and you can easily avoid them and then just jump right back into the game. I've taught people how to do this on my channel, and again, it's not super fun. News can still get you anyway, but the likelihood of it happening is so far less than it happening in stocks. And it's really the only, I guess, fundamental factor you really need to consider when it comes to actual trading. If you're investing longer term, okay, some of these other things that are going on in the world geopolitically do matter, but on a day-to-day basis, they really don't. And like I said, you can shut it all down, wait for the news event to go by, wait for the after effects to occur, and then jump right back in and resume. And that's really nice. You don't have to worry about balance sheets and CEOs doing this and lawsuits and recalls and the price of oil and all this other stuff that goes into the price of an actual stock. And the way Wall Street interprets that on a day-to-day basis, that's just miserable. And I was still willing to do it anyway, but then I found Forex and I'm like, oh, I don't need to do any of this stuff. I just need to watch out for this small handful of things and go about my day and then use my charts for everything else. It's fantastic.
It absolutely is fantastic. So let's cover the advantages. 24-hour marketplace where it's available for everyone's schedule. Other markets are not available for everyone's schedule. I love that it comes without biases. A lot of biases are just gone. You no longer love Tesla stock because you love your Tesla car. Like, that's a real thing. Or I have people that worked in a certain field, like in engineering, and they only will buy like semiconductor stocks. Like in Forex, you can't have any of those biases. It's so great. You don't need to worry about gaps. You have a 24-hour market, and you've got this huge liquidity that allows you to do a lot of things. And Patrick, you mentioned you can jump out and jump back in. That almost costs you nothing in Forex. Like, the cost to jump out and then jump back in is so negligible in Forex. But in other markets, like an options market, if I had to liquidate a trade and then get back into it 5 minutes later, that's going to cost me a pretty big percentage of my investment. So there's so many great things. And in the end, we both agree, and I love what you said, it's a blank slate for perfect charting. You don't have any of the biases. You can just follow the chart. Love it, love it, love it. Now look, as you can tell, Patrick and I both love Forex trading, but there are definitely disadvantages that come for it. Now, one of the most controversial things I always tell people is well, when you look at Forex trading, it's actually quite low volatility relative to other products. And people always say, what the hell are you talking about? Forex is the riskiest game out there. It's the most volatile. When you look at volatility on a percentage change, a big 24-hour move in a currency is 1%. That's a big move in a 24-hour. Go look at the stock market. Go look and just see what did Google do today, or what did Tesla? They're up and down 4, 5, 6%. And then you go out and take a look at some of the other crazy ones. They can easily be up, 15, 20%. We had a big run in crypto today, and I think I saw MicroStrategy, which is a big holder of Bitcoin. I think they were up like 25% today. Oh, sorry, up 11% today. But these moves that you see in other markets are huge when you look at Forex. So Forex is actually one of the lowest volatility when compared to others. Here's the problem. when you open up a Forex brokerage, they give you the leverage to make it the most dangerous game in town. So the disadvantage of Forex is when you go in and trade it and you're given that leverage, you start to see all these dollar signs in your eyes. And you think, oh, I've got the ability to trade a big account or a big amount. Why shouldn't I trade it? That is really negative for the newbie. Very negative for the new person. And I know that I'm guessing that 70-80% of the people listening to this, if you've traded Forex, you blew up your first account. Why? Not because Forex was so volatile. It's because the leverage that the Forex brokers were willing to give you made it to where if you lost 3 in a row, you were done. So the disadvantages is the leverage, in my opinion, is way too big. Way too big is what they allow you to do. So here's the irony about Forex trading. You've got all this leverage, but if you want to trade it correctly, you're not going to use it. What do you think, Patrick?
I will only push back on that very last point that if you really want to make any kind of meaningful difference in your account year to year, leverage is necessary. Now, the way we look at it when we first start, no, you're right about all that. That is what kills everybody's account. Everybody knows I blew out my first 3 accounts, and this was a big reason why. I was really excited to see that for every dollar I put in, I could get up to 50 in the game in the United States. That was really, really exciting because I didn't feel like 1-to-1 was going to get me out of my situation anytime soon, but 50-to-1 certainly could. And I didn't understand the rest of that. Yes, 50-to-1 certainly could get you out of a bad situation, ... if you do literally everything right, which nobody does early on. So, and yeah, to what you said too, a 2% move on a Forex pair in a day, that's significant. Like you really notice it and you really hope you got a piece of that. If not, you're pissed off because that's 2% is gigantic. 5% is a flash crash, for God's sakes. But yeah, not only that, I was even looking for more volatile pairs on top of the leverage I was already using. So I was doing some deep research on the dollar Swedish krona and the Canadian dollar versus Swedish krona. And I thought I found some really cool stuff there. I'm like, oh man, look how many pips this thing moves in a day. It's wild. I mean, if I can just figure this out, I'll really get out of this industry quick. So just the stupid crap we think of early on in this game. And leverage is really responsible for a lot of that. I shouldn't blame leverage. We should be blaming ourselves. But if leverage wasn't there, we wouldn't have these wild dreams when we first start this business. So I had to, I know on my channel, have a real come to Jesus moment on the podcast with a lot of people and say, hey, look, I know leverage is there, but if you're starting with a $200 account and you think you're going to turn that thing into $1,000 or anything meaningful to get you out of a bad situation, it's never going to happen. So just stop. And I got a lot of pushback from that. They were like, people are arguing with me saying, no, you can do it. I saw this guy do it over here. I'm like, yeah, he told you he did it, but did he really, did he catch lightning in a bottle and then have the presence of mind to take all of his profit off the table? I really, really doubt that. This is not realistic. You're going to have to treat this like a long-term business, not like a short-term hustle. And I'll bet you I lost some subscribers that day. But you have to dash those people's dreams because there was nobody there to dash mine. And that's why I blew out 3 accounts. So, and I'm sure other people have had it even worse. So you're right. This is I think is the biggest disadvantage out there when it comes to Forex. It's not anything the Forex market did to deserve this reputation, but that leverage right there has taken so many people down and just completely knocked them out of the game before it even started.
Leverage is simply the volume knob. So as a new trader who's bound to make some mistakes, and again, all the psychological mistakes that we've talked about, you're going to make some or all of them. If you have the volume up louder, those mistakes are going to be more painful. If you have the volume down lower, they're not going to be as painful. You are going to make them. That's a guarantee. The question is, did you turn the volume up full blast right when you started trading? If so, it was very, very painful. So just like with music, the volume knob, you turn it up when you can handle it. And so when I said you never use Forex leverage, that's not true. You want to use the Forex leverage when you're ready to use it. My favorite strategy in Forex is pyramiding, or what I call legging in, where I'm trying to build the biggest position that I possibly can. Like, I'm trying to build huge positions. And what I'm trying to do is I'm trying to catch a major trend. And if I can catch that major trend and buy an appropriate amount here and then put in a stop, once it gets to a certain point, I want to buy more and then move my stop up to where I have an appropriate amount of risk. And then if it goes for me more, I want to get more. I want to get more. And look, I'm trying to build these positions and I'm using lots of the leverage that's afforded to me, but my stop is always moved up each time I take a new position to the original risk amount that I took. A lot of times these trades do what I call fizzle out, where I didn't get the big move I thought, and I built up a 6x position over like 2 or 3 weeks, and then they fizzled, and I ended up breaking even or having a loss. That's really frustrating, but look, I know the game I'm hunting for. I'm hunting for the big one. Nothing's better when you catch a big move like this. The biggest move I caught personally in Forex was in 1998 when the markets were crashing. I was short Aussie yen, and I had 40 lots that I'd built up over about 2 weeks as the markets were falling. And I built it up to a 40 lot position, and the Aussie yen pair dropped 400 pips. Well, that's what I ended up making on the profit. That was my biggest win in Forex. Really, that still is my biggest win in Forex. And I did it using leverage, but I did it correctly. So look, I'm not saying you can't use leverage ever. All I'm saying is it's a real negative until your psychological problems are fixed.
And I haven't ever come close to trading anything resembling 40 lots. So good on you for at least getting to that point.
Well, wait, Patrick, let me tell you the rest of the story, because that was the next trade was the last major trading mistake I've made in my career, at least what I consider to be a major trading mistake. That was so euphoric. It was just so awesome. I mean, fist pumping, and I rarely fist pump, but I was fist pumping. I'm a very mellow guy. The next trade I made was 100 lots. And the second I hit the button, my P&L showed negative $3,500. And I knew immediately, oh shit, I think I've made a problem. It went against me. I took the loss, luckily. But that to me, again, we've talked about my cycle is when I have a big gain, I want bigger gains, and I want bigger gains. It just encourages me to take more risk. That was the last major mistake I made, and it hurt. It hurt. I lost about 40K on that one button click.
So the other disadvantage that I can think of then, apart from the leverage, is an advantage we talked about earlier, because I think it cuts both ways. Forex being a 24-hour marketplace is a problem sometimes, because you can really do this wrong. And I'm speaking from somebody who did do this very wrong. There's a lot of different bad routes you can take here. Rob, go ahead and start us off, because I have some thoughts that aren't even on the sheet here.
As an extrovert, this was my Achilles heel. And I said earlier how when I started trading, and there wasn't really after hours trading, I could only be an idiot 7.5 hours a day, and then I had to wait for the next day for the markets to open up again. I've said this for years and years and years, and I'm going to say this to everybody. If I started in Forex, I'm not sure if I would have made it or not. Just think about that. I don't know if my capital would have held out long enough for me to figure out not to be an idiot with a 24-hour-a-day marketplace. So for someone like me, an extrovert, it is such a negative for it to always be open. And look, I used to trade out of boredom a ton. The good thing was when I started out, you had to go to an office. You didn't trade at home. You literally I had to drive 30 minutes to an office. And then once I left the office, there was nothing I could do. Now it's on your phones. It's at your house all the time. At any time, you can just click a button and you're not bored anymore. You get all the feelings, all the rush. It's a really, really negative thing for extroverts. And as I said earlier, I don't know if I would have made it had I started with Forex. I needed to learn the discipline and learn how to curb that.
Yeah, because the biggest psychological hurdle of having leverage mixed with a 24-hour marketplace is when you're first starting out, especially, It allows your mind to run completely wild with the possibilities of what you can make should you, one, leverage up as much as you can, two, trade as often as you possibly can. There's two really big sessions. You have London and New York. If I'm looking at this, I'm like, man, if I just grind it out and trade London and New York, ratchet up my leverage as high as it can go, what are the possibilities? And I'm sure this sounds absurd to a lot of people, but it doesn't sound absurd to a lot of first-time Forex traders. I'll tell you that. And that's where, I don't think YouTube and Twitter does them any favors, because you see these people with these big home setups with, 6, 8, 10 monitors, and you're just like, all right, this is the grind I need to be set up for. And that's so not the case. On top of that, it's a terrible lifestyle if you do it this way. You're not going to make any friends. God forbid you live with other people. They're not going to like you. And the sleep schedule has to be atrocious. I had a terrible sleep schedule. It was ruining me. It was ruining every relationship I had. It was ruining my body. It was ruining my state of mind. Everything. Because I thought I had to conform to this certain way of trading. And just so you know, if you didn't know this already, it doesn't have to be that way at all. Episode 3 of the Forex Q&A podcast. I just looked, over 158,000 views on an audio podcast. There's a reason for that, and that's because it was the big awakening moment where so many people who thought you had to do things one way said, oh, wait, I can do things a different way in terms of how I approach this on a day-to-day basis, and it works better, and it gives me my life back. That can be really good. But I'm not going to sit there and say it's like BC and AD or anything like that, but before that video came out, most people hadn't even really thought of that. And they were grinding themselves down to the bone, doing something that should be somewhat enjoyable, or else why else would you do it?
I'm just going to sigh, and just after what you said, it's so true. I said for a few years, again, Forex for me has always been one of the things I trade. And so when Forex gets good, I always become very excited about it and say, hey, let's spend some time over here. I started trading Forex in the really right before and right during the crash of 2008, 2009. It was great. And then it really died down a bit. It really wasn't a great market for like 2009, 2010. But then in like 2011, 2012, the Eurozone started to look like it was going to break apart. And oh my gosh, Forex trading was awesome. I mean, I've never seen a market that good. I don't know if I'll ever see a market that good again. I'm hoping I do. But for a good 2 to 3 years, and then we got Brexit, it was amazing. My sleep schedule, and I'm not just talking about my sleep schedule. I was waking up multiple times a night, checking quotes, checking things. I remember one time I woke up and I was on my phone, and my wife looked over and looked at my phone to see what I was looking at, like she had caught me. And she said, why can't it just be porn? And then she fell back asleep. Can you imagine that? The wife's like, I wish she was just looking at porn, not the Forex market.
But it was porn. I mean, you had the Eurozone collapse, you had Draghi, you had Grexit, you had the taper tantrum, all of those things happening at the same time. Go look at the ATR day to day from back then. It was so different than what you see now. Volatility was everywhere, and you had these huge moves almost every day. You maybe had one day of consolidation a week, but that was it. Like, that sucker was moving. It was so exciting.
It really was. But I do remember telling people this multiple times during that period. I love Forex trading, but it's completely ruined my life. And look, it's a little bit of an exaggeration, ruined life, but really, I was tired all the time. It was a mess. My sleep schedule was screwed up. Again, relationships were strained. I really had to decide, hey, Forex needs to take a back seat for a while. I need to get back on track. And now there are times I will still check things during the night, but it's not very often. Not very often, because I've decided this isn't the life I want to live. So I'm going to do my trading a much different way than I was back then. And Patrick, you're right. It was a different market to where you could make a lot of money in just a few hours. It's just a different market today, and I'm so happy about that because now I can sleep.
Yeah, and I'll second that. It's calmer now, but you can make pretty much the same amount of money. day to day if you wanted to, because with less in volatility comes less spikes, less chance to lose money at the same time. So yeah, I agree. Now, in terms of solutions, there's really not going to be many this episode because we've touched on most of that. We've touched on a lot of solutions in this episode itself, or I've done it on my channel, or we've done it here on the podcast. So Rob, is there anything you kind of like to say to wrap things up here?
Yes, I just want to say, if you're fairly new to this, or even if you've been doing this for a long time, you don't know until you've tried other things out. So I highly recommend, if you've only traded Forex, go dabble in the stock market a little bit. Go dabble in the options market. Go in the gold market, in the crypto market. And really, you can do this all through a demo account. You don't have to put real money on the line. You will find what fits you best, but you've got to be looking for it. So if you're really loving Forex now, but then you go and you try the metals market or you try something else, you might find that it fits you better. It fits both who you are personality-wise, and it fits your lifestyle better. And it also helps you overcome some of your failings that you're doing. So my advice to everyone is, if you've only traded Forex, go out and play around with other things. Go read some books on some other things. Go open up demo accounts and play around with it. See if you can develop a system that's profitable. It's going to be really good. And like I said, eventually you will find the thing that fits you like a glove. And that's where you're always going to get your best success.
And I want to hear from all of you too. So those of you who are on YouTube, or those of you who are on the podcast players, go to YouTube and go to the comments section. Let us know if there's something we haven't covered in terms of, let me just ask you this. What was the dumbest misconception you had about Forex before you actually started trading it? And how long did it take you to realize that you were completely off base with that misconception? I'm curious to hear if it's something we haven't covered on this episode. I'd like to hear it from you. But on top of that, thank you for joining us here at the Trading Psychology Podcast. And Rob and I will see you next week.
Have a good week, everybody.